Joining us now to talk more about this NVIDIA move and the broader sell-off, BD8 Capital Partners CEO Barbara Duran and Charles Schwab, Senior Investment Strategist Kevin Gordon. Good afternoon, guys. Barb, I know NVIDIA is one of your faves here. What did we learn from these results and maybe from sentiment and the way it responded today?
Well, I think NVIDIA has been caught up in this momentum selling that started last Friday and I think has continued all week. I mean, you saw NVIDIA was actually up this morning and then got caught up in the broader sell-off. I think the news was very good. I mean, what the CEO said was that they need, we talked about DeepSeek and what that does in the area, but that it could actually create so much more demand because the power needs, computing needs could be 10 times, 100 times, greater. So longer run, it looks like they have a much more sustainable path because that's obviously been the question. Is this sort of a few quarters? But it looks like they've got a few more years here. And I think once this sell-off settles down, which I'm not sure when that is, I think this stock will regain its momentum and continue higher. So I think this is really a function of what's going on in the market, which is great uncertainty, which seems to be being caused by certain administrative pronouncements, from the administration about tariffs and the uncertainty that's creating among investors and corporations and indivials.
You think it's really the tariff talk that's doing this with the markets? Do. I mean, because the supposition had been, well, that this is a negotiating tactic versus something that the president plans to do long term. And there was some relief when the Mexico and Canada stuff was put on pause before. Do we think it's real now?
Well, look what happened today. I mean, people have been assuming it's more bark than bite, but he came out today and he doubled the tariffs on China. He said March 4th for Canada and Mexico, and then he talked about slapping 25% on Europe. So it seems that he's not backing off, and that's what really triggered the sell-off today. I think the market was trying to regain its footing from the volatility of the last week. And I think what happens with all this uncertainty, you're not sure, bark versus bite, and companies that may be planning to do X, Y, Z in other countries have to wait and see. How are they going to be affected? And certainly you've seen this. There's been enough publicity, I think, about, immigrants and the deportation, what that will do to labor and construction and agriculture. Restaurateurs are worried. And so you saw it reflected in two important consumer confidence reports in the last week. And that was that consumers has really seen a surge in inflation expectations. And that's dangerous. If people start to think that it can be self-fulfilling. So I think it's the uncertainty that's doing that. And if it continues, I think what we're seeing this week is a bit of a growth scare, that if corporations start to hold back, I mean, you saw equipment sales this year are down, are only up 3% versus 5 to 6% last year. Is that the start of corporations holding back on CapEx?
Right.
I don't know. I think uncertainty can bring a lot of problems.
Kevin Gordon, is your diagnosis the same of what ails this market? Is it believing that the tariffs are really going to happen and that they're going to have an economic impact that's different from what the president says?
Yeah, well, I think, regardless of whether they're kicked in or not, I think this action today, and not just today, but over the past week or two, is more reflective of, I think, just a general exhaustion that there is now. Even if you get another delay for tariffs for goods coming from Canada and Mexico, there hasn't been a positive slate of economic data coming through lately. And admittedly, it's more so pessimistic on the sentiment side, not as much on the actual hard data. But to the extent that we want to start to take more survey-based data a little bit more seriously now versus a couple of years ago, and believe that some of the rolling over and the deterioration in these metrics, whether it's the regional Fed, PMI data, and then you start digging into some of the details like the employment indicators or, prices paid components starting to pick back up.
Right.
There's a lot more meat on the bones now, especially from company commentary around not just the tariffs themselves, but the nature of this.